Welcome everyone, and thank you for joining us today. I'm Susanna Streeter, your host over the next 2 days. We have a packed programme lined up for the PRI Digital Forum EMEA. And before we dive into the day ahead, we didn't want to miss the opportunity to update PRI signatories on the organisation's activities over the past year. We'll shortly be joined by the chair of the PRI, Martin Skancke, and the CEO, Fiona Reynolds. They'll talk us through the organisation's management and financial report, the next 3-year strategy consultation, and the elections for the PRI Board. There'll be time for a Q&A at the end of the SGM. You can submit questions throughout the session using the Questions tab. And to help us answer effectively, we ask you to please include both your name and your organisation when asking those questions. If you have technical difficulties at any point, please check the FAQs tab at the top of your screen, where you'll find advice and contact details. To get started, I'll now hand over to the chair of the PRI Board, Martin Skancke.
Thank you, Susanna. Dear signatories, we were hoping to greet you in Tokyo this year for the PRI in person and this year's Signatory General Meeting. Of course, that did not happen, and we now have a virtual event. But I hope that many of you will have found time to dial in and to share this with us. It really is an important opportunity for us to connect with our signatories, to report on what we've done in the past, and also report on our plans for the future. I'm here not just on behalf of myself, but on behalf of the entire PRI board. And I wanted to use this opportunity to talk to you a little bit about what the PRI board has been focusing on over this last year. And after I've done that, our CEO, Fiona Reynolds, will go through a more detailed management and financial report, and also go more into detail on the proposed new 3-year strategy for the PRI. But I wanted to add a little context to that from a board perspective. As you will recall, we had a 10-year anniversary for the PRI in 2016. We used that as an opportunity not just to look back and celebrate what we've achieved over the past 10 years, but also looking forward and thinking about the next 10 years of the PRI. And in close consultation with our signatories, we developed what we call the blueprint. So the blueprint is really a long-term strategy plan for the PRI, where we set out some ambitions covering different areas of responsible investing. And the blueprint is really the foundation for the 3-year strategy plan. So we're now at the end of the first 3-year strategy plan period under the blueprint, and we're now consulting with you and presenting a draft strategy for the next 3-year strategy period under the blueprint. And the board has, of course, spent considerable time this past year on developing this draft strategy. We see it as our primary responsibility to make sure that the PRI advances its mission and also provides value to you as signatories. And obviously, we've put a lot of emphasis on accountability, and I'll say a few more words about that shortly. The important thing now is that we're releasing this 3-year draft strategy document, and we're seeking your views on it. We want to make sure that our priorities are guided by you as signatories and that we stay relevant and useful to you. So please, when this SGM is over, go to the PRI website, find the draft strategy document, read it, and give us your comments. And we'll be sending out, obviously, communication to all of your organizations around this. One important part of our work is also around reporting and accountability. We've undertaken a significant reform of the reporting and assessment framework, and you will see this when you start doing your annual reports to us for 2021. We've had considerable signatory involvement also in this process. The reporting and assessment framework is important for us for several reasons. It provides a framework for signatories to learn and to benchmark themselves. And through the framework, we've actually built up the world's largest database on actual reporting, actual responsible investment practices. It's also an important tool for increasing accountability based on what our signatories report to us. We view 2021 as a pilot year. This is a large overhaul of the framework. We hope that it will be simpler to use for you, but in many ways maybe also more challenging because we need to raise standards across the board. And we will carefully assess the experiences we have with the framework when the reporting period is over. This year has been different for many of us, and I'm sure that very many of you are not watching this from your office, but from your private homes. Obviously, the PRI has been affected by this as well. We've had to very quickly adapt to new ways of working. An important role for the board has been to oversee this and to make sure that we continue to provide signatory value also through this very difficult time. We want to make sure that our signatories can stay engaged with the PRI and that we can still offer relevant, useful input to you with the questions that you're struggling with. But I think also looking forward that there's a lot to learn from this period, and we will carefully assess how we can use everything we learned about digitalization to bring the PRI even closer to you as signatories, have more virtual events, and really make sure that we can use technology to bring the PRI even closer to the signatories going forward. So these are things that the board will want to work on also in the next period. So this was a high-level overview of some of the main issues that we've been working on over the past years. Now I'll let Fiona go through the management and financial report and also take a deeper dive into our draft 3-year strategy before we present the election candidates and have a Q&A. So over to you, Fiona.
Well, thanks, Martin, and hi, everyone, and welcome to our first ever virtual Signatory General Meeting. We have signatories, of course, dialing in from all around the world today, and we're also recording this for others who may want to watch it later. But no matter wherever you are in the world, I really hope that you and your families are all safe and well in these unprecedented times. I would, of course, love to have been with you all in person in Tokyo, but we're still grateful to be able to share this annual update on our activities to show how we're progressing against our 10-year blueprint in the last financial year, as well as to discuss our plans for the next 3-year strategy. I'm also looking forward to participating in various sessions at the wider EMEA forum, but also the Americas event in November, and to share some more in-depth insights into some of the PRI's work. But as we only have a short time, I'm just going to take you through some of the most significant activities that we've undertaken over the past year. The PRI financial year ends at the 31st of March, so the time period we're reporting against is mainly pre-COVID, just as many of us were going into lockdown. So these are just a few highlights of our work. There's far more detail in the full annual report, which has been sent to all of our signatories, but it's also on our website. I'm really pleased to report that the PRI story continues to be one of strong growth. In 2019-2020, we welcomed 665 new signatories, including 86 asset owners. And this growth rate of 28% is the highest increase we've ever had, and up from 22% last year. So responsible investment is definitely on the move. As of March this year, we had 3,038 signatories who together represent more than US $103 trillion in assets under management. Growth for the PRI, of course, is not about growth for growth's sake. It's about how we truly move responsible investment into the mainstream. Growth has been strong across the globe, both in emerging and in developed markets. It's been especially significant in Latin America, where we saw a 90% increase. To continue to support our growing signatory base across the world, our staff numbers have also increased. And as of March 2020, we had 140 staff based in 15 countries. PRI in person was, of course, a highlight of last year, even though now it seems like light years away, bringing together nearly 1,800 delegates in Paris from 830 different organisations and 54 countries. And happily, it was the largest responsible investment event that's ever been held. The conference theme was Responsible Investment in an Age of Urgent Transition, which was highlighted from the outset in a welcome message by President Emmanuel Macron. And today, more than ever, that urgent transition really is needed, but we do need to go further, faster. Despite limitations on in-person meetings in the latter portion of the year, our signatory base has never really been more engaged, and more than 850 signatories took part in relationship meetings over the year, and through our regional forums, we brought together nearly 600 signatories. We had over 500 signatories participating through 32 advisory committees and working groups, and hundreds more making use of our collaboration platform, which we recently relaunched. And this is in addition to a variety of other channels, from workshops to discussion forums, surveys. The PRI signatories are active and really engaged across the whole of the PRI initiative. As our staff and signatory numbers have grown, our finances have also increased to support our activities. So just looking at a couple of headline figures, total income grew in the past year to £19.7 million. This is up from £14.7 million the year before, and the vast bulk of our income is made up of signatory fees and some grant funding. Our total expenditure grew by up to £18 million, and this is up from £14.2 million last year. And we achieved an overall operating surplus of £1.8 million. This is up from £0.5 million in 2018-19. And we've used this surplus to build our reserves, to invest in growth of the organisation. And as with all other organisations, we have to make sure that we are resilient, particularly during these challenging times. Despite the challenges of the pandemic, I'm really pleased to be able to say that the PRI remains in a strong position. We're able to support our staff and to continue to deliver for signatories. We continue to hold a minimum of 3 months full operating expenses, which is in line with the PRI reserving policy. Our corporate structure remains unchanged from last year. The group comprises of 7 entities, with PRI Association being the ultimate holding company. So that's a little bit about the operations and finance side. And now I want to move on to update you on how we're progressing against the blueprint. As set out in our blueprint, our mission is really to bring together responsible investors to develop sustainable markets that contribute to a more prosperous world for all. And as I mentioned, there's a great deal more breadth and depth of detail in the annual report, but I just want to go through a few of the highlights of things that we've been working on. So over the year, we're focused on 7 flagship projects, which you can see here on the slide. And I'm looking forward to sharing more details on some of these during the forums that we're having. And I'm personally involved in a number of sessions, including a legal framework for impact, human rights, and launching our new reporting framework. But we're also having sessions on testing the EU taxonomy, the inevitable policy response, and the SDGs. Throughout the year, we supported signatories on priority ESG issues, as well as delivering a range of publications on and tools for both investment managers and asset owners. Part of the theory of change at the PRI is that a rising tide lifts all boats. So ultimately, in seeking to advance responsible investment and fulfill our mission, we believe that we must bring everybody along on the journey with us. Therefore, ensuring we support all of our signatories, no matter their depth of knowledge on responsible investment, their size, or the stage of ESG incorporation is really critical to how we deliver. So in line with this philosophy, one of the key pieces of work we delivered this year was a series of short reports providing an accessible introduction to the main approaches to responsible investment for those at the beginning of their journey, which we'll continue to expand upon in years to come. We have also sought to support investors further along in responsible investment practices by increasing the depth of insight across asset classes, leading awareness and response to existing and emerging ESG issues. And a few highlights here include our ESG in credit, risk and rating program, our technical guide on responsible investment in the hedge fund industry, and a series of case studies and reports on passive investment strategies. In addition to building responsible investment knowledge and capability amongst our signatories, we've also been seeking to empower you to exercise your investor rights and to make use of your key levers to influence change. Last year, we launched Active Ownership 2.0, a major new program of work. And over the past year, we've coordinated collaborative engagements to maximise investors' collective impact, promoted alignment of proxy voting practices with responsible investment beliefs, and enhanced the PRI collaboration platform to shape it into a global hub for active ownership. And through our Acting in Concert guides, which are continuing to be expanded, we're aiming to help address concerns in the market about collaborative engagement by working with law firms to clarify where barriers do or do not exist. One of our ongoing engagements that's been led by some of our signatories, in particular John Houchen from the Swedish Council of Ethics and Adam Matthews from the Church of England Funds, which I mentioned to you at the SGM last year, is the Global Tailings Dam Review. So following the tragic tailings dam collapse at Brumadinho in Brazil in January last year, we co-convened a Global Tailings Review alongside the UN Environment Programme and the International Council on Mining and Metals. And the review has led to the development of a standard on tailings management that can be applied to existing and future tailings facilities around the world. And the standard is really a first of its kind. And I want to thank both John and Adam for their leadership. This really is active ownership 2.0 in action. It's investors using their leverage to bring about change. The number one ESG issue before COVID-19 came along for our signatories, and the one in which we see the most engagement, has continued to be climate change. As such, we have continued to expand our work in this area. We've championed climate action in a variety of ways, including committing to work with our UN partners to meet the Paris Agreement, to empower investors to assess their portfolio alignment with a just transition, encourage investors to make substantial allocations to clean assets and technologies, to align the PRI reporting framework with the TCFD, to convene investors' engagement with companies on climate risk and opportunities, to demonstrate investment implications of national climate change goals, and to collaborate with policymakers to address barriers to scaling up clean investments. And we've seen a really big uptake in signatories acting on climate change, with 85% of asset owners and 81% of investment managers, I should say, explicitly factoring in climate-related risks and opportunities into their investment strategies or products. This work culminates in a number of major initiatives through which we have been able to support investors taking ambitious climate action steps. And these include the work that we've done on the inevitable policy response, the investor agenda, the UN-convened Net Zero Asset Owner Alliance, the Task Force on Climate-Related Financial Disclosures, and of course on Climate Action 100+. We also participated in COP25, and we've seconded staff to the office of the COP26 Champions team to mobilise the investment community ahead of COP26, which for us is the most important climate summit since the Paris Agreement was improved. So I just want to highlight a couple of these initiatives in more detail. So investors need to, and are now starting to do more than ask companies to set net zero targets. And in September last year at the UN Secretary General's Climate Summit, with UNEP-FI, we launched the Net Zero Asset Owner Alliance, or AOA as it's become called. A year later, 30 asset owners have now committed to net zero across their entire portfolio by 2050, and this includes some of the largest investors in the world, such as Allianz, AXA, and Kelpers. And this is groundbreaking work. It hasn't been done before. Currently, the AOA members are road testing the target-setting methodology for transitioning their portfolios to net zero, including an interim 2025 target, the draft target-setting protocol capturing the approach that will be used for target setting by the asset owners includes an emissions reduction target range of 16 to 29%, and it's now out for public consultation. In addition, this year we made reporting on a subset of TCFD-based PRI climate reporting indicators mandatory in our reporting framework as part of our program to drive forward TCFD implementation. So 2,097 investors reported on these indicators in 2020, and this is a 3.5-fold increase as a result of the mandatory reporting requirement. In the next signatory reporting cycle, the mandatory TCFD-based questions will be publicly disclosed and privately assessed. Making TCFD-aligned climate change indicators mandatory is one part of the wider initiative for us to increase accountability of PRI's signatory base, to really strengthen what it means to be a signatory. So we introduced our first set of minimum requirements in 2018. And each year, signatories not meeting them enter a 2-year engagement in which we provide support and resources to help them make the necessary changes to their policies and practice. Engagement has really largely been very successful. In 2018, we engaged with 121 signatories, of which 69% went on to meet the minimum requirements in 2019. The following year, we engaged with 123 signatories. 83% of these met the minimum requirements in 2020. This year, our first set of signatories has reached the end of this process, and we delisted 5 signatories for not meeting the minimum requirements. Of course, our aim is always to get signatories moving forward in their responsible investment practices rather than to delist them. But if people aren't meeting the minimum requirements, then we need to take action. This year, we also completed an extensive signatory consultation on reporting and assessment, and we published a detailed proposal on what the new PRI reporting framework, assessment and reporting outputs could look like. So over 580 signatories participated in the consultation. The feedback provided really valuable insights on the strengths of the current reporting and assessment process and where improvements could be made. We subsequently developed a detailed proposal on how the reporting framework, including reporting outputs, could be improved. And the proposal really covered a few broad areas. So first of all, the key elements was set out of a new core and plus model for reporting, a more streamlined reporting process that will hopefully be shorter and less time consuming, retaining confidential signatory assessment with new recalibrated and harder scoring, and improving outputs, customisation, visualisation, summary reports, and accompanying senior executive or C-level statements. The pilot launch of the new framework is scheduled for early 2021. And while we're continuing to increase accountability, it's also really important to showcase and celebrate leadership. So we developed our leaders group to do just this, recognising those signatories who are already implementing best practice in their daily work. So every year, the leaders group focuses on a new topic identified in the blueprint. And for this second year, it focuses on climate reporting against the indicators in the PRI reporting framework. And I'd really encourage you to visit the leaders group page on the website to find out more. The PRI Awards are also an important vehicle to highlight innovation and impact amongst the signatory base, and this year's winning projects were selected by our independent judging panel. And we'll screen a video with further details and commentary from some of our judges, and we'll host this on our website as well. So in the meantime, I really want to congratulate our 2020 Leaders Group and all of our PRI award winners. And finally, in spite of all the work we're doing to educate and enable investors with tools, with resources and platforms that they need to implement responsible investment and increasing accountability and leadership amongst our signatory base, it would be pretty difficult to achieve our mission without also addressing systemic obstacles. The obstacles which hinder long-term investing and create incentives for short-termism. So as part of our global policy engagement program this year, we continue to engage with policymakers around the world. Specific focus has really been on the EU, the UK, China, and the US. And this has included 11 briefings, 34 consultation responses in the last year alone. We sought to, in our work, both advance positive policies such as the EU taxonomy and the UK stewardship code, as well as oppose backward steps such as the SEC shareholder proposal in the US. So I now want to take a moment just to thank you all, our signatories and stakeholders, for your continuous support, for the amazing commitment that you have to advancing the principles, to ensuring that we do all collectively achieve our mission. I want to particularly thank all of you who have participated in working groups and advisory committees that have given your input into guidance and shared your time and your knowledge with us and with others. I also want to thank the PRI Board. Like many organisations, we've had to move to virtual board and committee meetings and deal with global time zones that range from Tokyo to Oslo. So we have people from very early in the morning to very late at night. And our board members' commitment to the PRI has never wavered. And I also want to thank the PRI staff for your dedication, for your leadership, and your ability to adapt to changing circumstances, to the ones that we've all found ourselves in, with good grace and humour. So just to conclude, the various programs, guidance and initiatives that I've mentioned have taken us one step closer to meeting our commitments outlined in our 10-year blueprint. It's been a busy year. It has, without doubt, been an unprecedented one. I really couldn't have imagined when the calendar turned over to 2020 exactly what the year had in store for us, and it's not over yet. However, in spite of the many challenges investors have faced around the world, it's clear there's been really significant progress made around responsible investment. COVID-19 has shown those in any doubt about the importance of sustainability, that a healthy economy, healthy businesses must be underpinned by healthy people and a healthy planet. That people, profit and planet are all interconnected. And investors are playing their role to ensure that we not only recover from COVID-19, but that we do, in fact, build back better. So thank you. So having spent time looking back at the year that was, I now want to focus on what's ahead of us and on the development of our next 3-year strategy. So PRI strategy is most importantly driven by our signatories, by what brings you value and helps to advance our shared mission. So our first port of call in developing our next 3-year strategy was to consult with you. Through our signatory survey, signatory focus groups and PRI board members, you told us that you wanted examples of best practice to deepen and sharpen ESG integration across asset classes, guidance on incorporating issues into the investment framework, a continued focus on climate change, a wider variety and more standardised data to drive policies and regulation relating to key ESG issues, an increased range of digital work, events and training, accountability within the responsible investment industry, support in shaping and measuring outcomes in line with the Sustainable Development Goals, and an increased focus on social issues, particularly on human rights. We received fantastic input and insights, and we took all of your ideas, your visions, challenges and priorities and mapped them back to our 10-year blueprint for responsible investment. The blueprint, which I'm sure you all know well, provides a strong framework through which we can organise and prioritise our activities. And I think that in the face of the pandemic, it's really clear that the blueprint is more important than ever before. Through the lens of your feedback and the blueprint, we then developed a draft set of priority work areas on where we propose to focus our efforts over the next 3 years, which will now form part of a signatory consultation. At a high level, under the Responsible Investors banner of the blueprint, we will drive ESG incorporation, increase stewardship ambitions, strengthen accountability and recognise leadership. To help create sustainable markets, we will address legal barriers, improve end-to-end sustainability data, align policies, regulation and market incentives, and embed sustainability in the economic recovery from COVID-19. And then finally, to create a more prosperous world for all, we will enable investors to focus on outcomes, secure net zero commitments, elevate social issues, and work with investors to do their part to deliver on the Sustainable Development Goals. Of course, supporting ESG incorporation really remains critical to this strategy and will continue to develop resources for those new to responsible investment, as well as respond to industry developments with work on asset classes and strategies where incorporation continues to progress. Within the priority work areas, we then drilled down further to identify the ESG issues that we propose to focus on in the next 3 years. So these include biodiversity, physical climate risks, tax fairness, diversity, equality and inclusion, climate mitigation, public health, including COVID-19, sustainable commodities, decent work, responsible political engagement, the circular economy, corporate purpose, and the impact of the digital transformation. In the interest of time, I really can't go through all of our priority work programs and ESG focus areas with you in detail today. So instead, what I'd like to do is focus on 8 key areas, because I believe that these will demonstrate the direction of travel that the strategy is taking us in. I think it's also worth acknowledging that the current events which frame this strategy, and in particular the COVID-19 pandemic, will of course have an input into the strategy. The human and economic toll of the crisis has been and continues to be significant, and signatories around the world have been impacted in many different ways. However, there is perhaps one small silver lining in all of this tragedy, and that is the significant boost it's given sustainability and the opportunity it has provided us to leverage the crisis to build back better. I think the world has now woken up and is finally beginning to understand the importance of sustainability, the interconnectedness of issues, that the foundations of a healthy economy at their core must have healthy people and a healthy planet. And markets are responding to this understanding. The pandemic has served as the first real proof point for many on sustainability. So early in the crisis, I kept hearing from people and from commentators that they feared ESG would fall to the wayside as investors and corporates struggled to stay afloat, focusing their efforts on dealing with the immediate concerns and immediate crisis management. However, what we've seen is that investors and corporates can, of course, walk and chew gum at the same time. And we've never seen you, our signatories, more engaged on ESG issues. And we're witnessing record levels of uptake on sustainability strategies. As we look to the recovery from COVID-19 and the drive to build back better, I think that the Sustainable Development Goals have really never been more important. I really like to think of the SDGs as the world's business plan, the North Star, if you like. So to address the recovery, we don't need to create a new plan. We need to implement and fund the one that we have. And this will really assist us in addressing the urgent issues that have been further highlighted by COVID-19. Inequality, labour rights, environmental issues, health and social inclusion. So I was fortunate to be at the UN in New York for the launch of the Sustainable Development Goals, but nearly 5 years on, our time is running out to achieve them. The UN Secretary General recently said that overall we're seriously off track. Hunger is rising, half the world's people lack basic education and essential healthcare. Women face discrimination and disadvantage everywhere. And one of the reasons for this faltering progress, he said, is the lack of financing. UNCTAD estimates that funding requirements for the SDGs is between 5 and 7 trillion per year from the private sector alone. Governments cannot fund the SDGs nor the COVID-19 response without the private sector. Against this backdrop of urgency, there really comes an opportunity. With tens of trillions of dollars in stimulus packages being rolled out, now is the time to accelerate progress against the SDGs. And investors have a really key role to play. But this requires a change in thinking and a change in practices. Many investors think about ESG risk and how those risks impact their portfolio. But some are now starting to think about the impact of their portfolio on the real world. They're adding in a third dimension, so risk, return, and impact. We believe investors' leverage enables them to shape outcomes in the real world, both in terms of increasing positive outcomes and also decreasing negative ones. So the first two elements of our strategy that I want to highlight are therefore really closely linked. Investors driving real-world outcomes that are in line with the SDGs. To help those investors that are seeking to shape outcomes in line with the SDGs, we've recently launched our Investing with SDG Outcomes report, which provides 5 steps for investors. We're also working with the law firm Freshfields on a new step in our fiduciary duty work, which focuses on the law and how it either enables or detracts from being able to prioritise sustainability outcomes. And the law really does need to keep up, because if we think back just 5 years ago, we didn't have the Paris Agreement, we didn't have the SDGs. To implement them, we need to think differently. We need the tools, we need the data, we need the regulation and policies. And our aim is really to bring all the pieces together and take sustainability to the next level. The third component I want to highlight is around improving sustainability data. We're aiming to drive meaningful data which better enables responsible investment. And this is going beyond just risk-related data and looking at end-to-end data that is decision useful and which seeks to also measure sustainability outcomes. So we've recently announced an important new partnership between PRI and the World Business Council for Sustainable Development to drive joint corporate investor action on sustainable development. And through this partnership, we'll work on decision useful sustainability data and on aligning incentives such as remuneration. This is about complementing existing efforts and approaches to developing ESG data and to strengthen the effectiveness of the existing standards and frameworks that are already out there. It's about convergence, and it's about plugging the gaps in those existing standards and frameworks. These are issues that have been talked about for a long, long time, but our partnership is about solving them. The fourth component is around elevating social issues, particularly human rights. In the past, social issues have often been treated by investors, by corporates and governments alike as the poor cousin of ESG, taking a back seat to environmental and governance issues. Interest in social issues or human rights issues, however, has grown significantly over the past few years. In a recent PRI survey, 64% of respondents said that COVID-19 has brought social issues that were not already on their radar to become priorities. In our 2019 reporting framework, signatories highlighted human and labour rights as priority issues. We already have some fantastic signatories who are really doing a lot in this space. In the past 5 years, approximately 115 institutional investors have engaged with 100 companies through PRI-led collaborative engagements using the UNGPs as a reference to improve human rights practices and disclosure. And according to PRI's data portal, more than 120 investors are already screening their investment portfolios based on the UNGPs or the OECD guidelines. However, though we have this fantastic core group of signatories who are doing really well and are really very engaged on human rights, this isn't the norm, and it doesn't represent the bulk of our signatory base. We've got over 3,000 signatories, and I'm talking about a few hundred. So we still have a long way to go. And I think many institutional investors are still unaware or unclear on how to fulfill their responsibility to respect human rights, even though they are defined in international human rights standards and were formally and unanimously endorsed by the UN in 2011 and then immediately reflected in OECD standards. Therefore, we want to really seize this opportunity and momentum that COVID-19 has provided to launch our 5-year program on human rights. We also recently concluded our human rights consultation, and our paper, which we're publishing today, outlines a 6-step framework to implement respect for human rights into your investment activities. The fifth component of our strategy is ushering in a new, more ambitious era of stewardship. The aggregate impact of our current stewardship practices is failing to meaningfully reduce systemic risks or address the SDGs. So last year we launched our Active Ownership 2.0 program, focusing on how we think stewardship needs to evolve. It's an aspirational standard for improved stewardship, which builds on existing practice and expertise, but explicitly prioritises the seeking of outcomes of a process and activity and common goals and effort over narrow interests. We'll be producing guidance on practical implementation, particularly where it comes to investors' proxy voting and real economy policy advocacy. As part of the ongoing review, we'll also be working to align our reporting and assessment framework in order to encourage and to reward the leadership that is already starting to emerge in this area. Of course, there are already some examples of ambitious stewardship which embody the aspirational standard of our Active Ownership 2.0 program, and a number of these are around the sixth component of our strategy, namely climate action and net zero targets. Investors are really critical to the transition. In fact, I really believe that without the finance sector, we will not solve climate change, and the transition simply won't happen with the urgency required. So we'll continue working with investors across 4 key areas. So corporate engagement, investment, investor disclosure, and policy advocacy with governments and other stakeholders. On corporate engagement, Climate Action 100+ is a great example of Active Ownership 2.0, which we want to see more of in the future. It's the largest ever investor engagement with over 500 investors who represent 47 trillion in assets under management. And it does really truly focus on outcomes, and it's really successful. To name just a few examples, we've had Shell, BP, Total, and Reliance Industries in India, all have made net zero commitments off the back of this engagement, off the back of Climate Action 100+. Of course, if we're to achieve the Paris Agreement, we need to see more than just investors pushing corporates. They also need to commit to net zero themselves across their entire portfolio. And the UN Net Zero Asset Owner Alliance, which are highlighted in the management report, really exemplifies exactly this. Looking at its disclosure from January of next year will make it mandatory to report and disclose against TCFD-based governance and strategy questions. We'll also introduce reporting on sustainability outcomes, not just on processes. This year, there was a threefold increase in investor climate reporting to PRI in Q1 2020, and this is primarily the result of PRI making it mandatory to report, though still voluntary to disclose. Yet, this increasing reporting does not necessarily signal a change in investment practice. Many investors are still at the start of their journey with TCFD. In a staircase analysis that PRI has done on the quality of investor reporting, only 2% of investors who reported were in the strategic category. And on policy advocacy, our research has shown us that investors really significantly underestimate the positive role that the responsible investment industry can play in encouraging policy change. We need investors engaging with governments across the globe, as despite all the work that I've outlined, it's pretty difficult to say that we could get to net zero without changes to government policy settings. Through our IPR work, we're encouraging investors to act, but also governments to act. Some are, but many are still lagging behind. Many countries still do not have net zero targets. So shifting gears just slightly, the seventh critical component of our strategy is around increasing accountability. And this breaks down roughly into three main areas. So improving reporting, increasing minimum requirements, and strengthening assurance. Working very closely in consultation with you, we've developed a new model to ensure that the reporting framework is shorter and easy to use, but at the same time, more challenging to attain the highest scores. It will also produce more useful outputs and it'll support the PRI's blueprint commitments. It'll feature a process-based, focused core component of closed-end questions that will be mandatory and assessed, as well as a more advanced, open-ended plus component of process and outcome-focused questions, which will be voluntary and not assessed. The minimum requirements that we introduced in 2018 are a critical component to our plans to increase accountability. We've committed to gradually increase the minimum requirements for signatories over time. And in the next set of changes, we will increase the standard required as well as reduce the time allowed to reach the minimum required standards that we've put in place. And you can see our proposed enhanced minimum requirements on this slide, but you can also respond to them as part of the strategy consultation. The other side to increasing accountability is showcasing leadership, the final key component I'd really like to highlight in our upcoming strategy. And this is not only about giving credit where credit is due, but providing an opportunity to educate and inspire other signatories so that they can learn from leading practices, raising the bar for responsible investment across the membership. So we will be supporting our signatories to be purposeful, consistent, transparent, engaged, and responsible. And we will be establishing a set of new leadership programs that you can be involved in. As I mentioned earlier, last year we launched 2 initiatives to do just that, the PRI Awards and the Leadership Group. The Leadership Group assesses the breadth of signatories' excellence across their organisations, focusing on a specific theme each year. For next year, that theme is going to be stewardship. Meanwhile, we will continue with the independently judged PRI Awards to recognise individual projects across our signatory base. And we'll continue to progress these initiatives to further showcase leadership over the coming 3 years. Through our accountability and leadership initiatives, we'll continue to move the needle on what it means to be a signatory, celebrating leadership and raising the bar, both at the bottom and at the top. So to summarise, over the next 3 years, the PRI will be working closely with you to bridge the gap that exists between financial risks and outcomes in line with the SDGs, to align legal frameworks, improve sustainability data and remove roadblocks, elevate human rights, increase the ambition of investor stewardship, increase net zero commitments, strengthen accountability and highlight leadership. ESG incorporation will continue to play a core role in PRI's work over the next 3 years. We intend to continue our successful range of introductory guides. These guides have proved particularly valuable to our newer PRI signatories, meeting an increased demand from our expanding signatory base. But we'll also continue to respond to developments in the industry with work on asset classes and strategies where ESG incorporation continues to progress, such as structured debt, strategic asset allocation, and venture capital. Alongside working with signatories, our technical work will also help you to meet the increasing range of challenges from regulators and other stakeholders in areas such as TCFD, the EU taxonomy, and human rights, providing useful tools to develop policies and practices. For asset owners, this will include extending and refreshing our list of due diligence questionnaires, helping this key group challenge investment managers to improve their practices. Over the next 3 years, we'll continue to work globally as well as locally, taking a digital-first approach to help us achieve this ambitious agenda and to continue to deliver value to our signatories as our membership continues to grow in both size and diversity. And we hope to deliver our next 3-year strategy without raising fees beyond inflation. So what happens next? Of course, all of this will only be possible with your input and active support. Having shared an overview of the vision with you, I really want to encourage you to check out the strategy document in full. There's a lot more detail there than I was able to provide today. We're now inviting signatories to give feedback prior to finalising our plans. So the consultation period begins today and we run this up until the 25th of November. The PRI Board will then review your feedback in December and will ultimately determine our final strategy, which will launch on the 1st of April next year. We really value your input, so please do take the time to respond to the consultation, which is available on our website. And just to conclude, and finally, if we're successful in working with you to implement our strategy over the next 3 years, we believe that it has the potential to contribute to really important real-world changes, including seeing an increase in ESG integration in financial policy and regulation in core markets. Legal frameworks for investing for impact would be available in several markets, leading financial systems aligning incentives, behaviours, and policy with sustainability. Investors using international human rights frameworks in their investment activities. Investors aligning with a 1.5-degree pathway, working towards net zero by 2050. Progress towards a global sustainability reporting system for investors and corporations. And this will be underpinned by investors shaping real-world outcomes in line with the SDGs. So I really look forward to working with you on this ambitious agenda and to receiving your feedback. I think together we can move sustainability forward in the next 3 years in ways that we haven't done before. So thank you, and I'll now pass back to Martin to discuss the 2020 PRI Board Director elections.
Thank you, Fiona. The next agenda item is the PRI Board Director elections. This year we have 1 vacant seat for an asset owner and 1 vacant seat for an investment manager candidate. In the PRI elections, the asset owner signatories vote for the asset owner candidates, and the investment manager signatories will vote for the investment manager candidate. We have 5 asset owner candidates for the 1 vacant seat, and you'll see their pictures on this slide. For the investment manager seat, we have 7 candidates, and you'll see 4 of them on this slide and 3 of them on this slide. I want to say on behalf of the board that we are extremely pleased that so many highly qualified people have decided to run for the board. It is a big strength for the organization that we are able to attract high-level candidates, and we are grateful for all of those who have put their names forward and who have volunteered to spend time on the PRI board. And then it's up to the signatories to decide which of these highly qualified candidates you want to have on the board. As I said, the asset owner signatories vote for asset owner candidates, and investment manager signatories vote for the investment manager candidate. The voting starts now, October 21st, and is open until December 4th. We will not have an opportunity for you, obviously, to meet and greet as we usually have at the PRI in person. But there are candidate statements and videos on the PRI website. So please familiarize yourself with the candidates. Go and see their videos so you can make an informed choice about who you want to have on the PRI board. And there is a link also on the slide to the PRI website where you can find more information about these elections. And please participate in the election. It is one of the most important rights the signatories have is to elect the PRI board. And we hope that you will actively participate and look at the election materials and then vote for the candidate that you think would be the best fit for the PRI. And with that, we are moving into the Q&A to be moderated by Susanna. So over to you, Susanna.
So we're now going to open to you, the audience, for the Q&A. Now there's a question tab on your screen, so please do submit your questions for both Fiona and Martin, including your name and your organisation, of course, and we will do our very best to answer them. Fiona and Martin are with me now, and we already have a few questions coming through. The first one, in fact, is will you share this presentation with signatories? Yes, we certainly will. It will be available on the PRI website from tomorrow. So please do spread the word. Tell anybody who hasn't been able to watch this event live. Now we have some other questions coming through. We have had one from Jennifer Coulson, and she says there's growing income from grants, donations and other sources. Can the board provide a sense of where this is going strategically? Martin, can you answer that one first, please?
Sure, thank you. This is really an important question and something that we thought a lot about when we set out the long-term funding strategy for the PRI a few years ago. We decided then that we would want the PRI to be financed through signatory fees, and I think for 2 reasons. One is that if you depend on grant funding, you have only short-term funding really for individual projects, and it's very difficult to build and sustain a high-quality organization with all those sort of temporary people working on projects. But the second one was maybe even more important, which is signatory accountability, and we need to make sure that the priorities of the PRI are set by the signatory through our strategy process. Just as we've now today tried to we have presented a draft 3-year strategy and asked for your input, and we have this strategy process where we try to make sure that our priorities are guided by signatory interest and not by donor interest. So that is really important, that we have signatory accountability, and that the PRI priorities are driven by the signatories themselves. Having said that, we also want to make sure that we can deliver as much value as possible for as low fees as possible. So on a case-by-case basis, we will, of course, accept grant funding, but that's not the main source of income for us. I think our grant funding now is around 10% of the total budget. So the PRI is funded by the signatories, and that's how the board feels that it should be. But maybe, Fiona, you can just add a few examples maybe from the last couple of years of the types of projects where we've had grant funding.
Sure. So as Martin said, I think for the PRI, we're in a really fortunate position, probably more fortunate than many organisations. So we don't have to rely on grant funding to keep the doors opened. That comes from having a good signatory base and signatory fees. But where we want to go into more detail for work, and we want greater depth in work, grant funding can definitely help us. So where we have grant funding is for projects like Climate Action 100+, where we're operating with staff in different places around the world, working on the engagements there, and we get grant funding for some of that work that also other organisations within Climate Action 100+ do as well. And it also helps us with some of the benchmarking work that we're doing as well. With our inevitable policy response work, we've relied on grant funding. We've had to do an incredible amount of economic modelling that we've needed to outsource to other organisations, particularly Vivid Economics, and that costs money. And we don't have the expertise in-house to do that. So that's another reason why we would use grant funding. So for various projects where they cost a significant amount of money, we go and get grant funding. But as I said, we're in a very good position. And I think we're in the position where we go to get grant funding to be able to deepen our work, to be able to do it more effectively. We don't have to go and get grant funding usually to get things started or to rely on it to run the organisation.
Okay, thank you very much, Fiona and Martin, for those really comprehensive answers. Let's move on to another question now, which has come through from Antti Savalakso from Oriel Investors. And he says, could you elaborate on the requirement to engage and vote? It's prohibitively expensive at the moment for some smaller managers. Martin, could you take that one? Or do you think Fiona?
Sorry.
Fiona, go ahead.
Yeah, sure. Engaging and voting is not necessarily very expensive. Number one, we have an collaborative engagement platform for our signatories. So actually the threshold for engaging and voting should be fairly low. But this is a part of our consultation now on minimum requirements. And so these are the kinds of views that we'd like our signatories to feed into that process before we make a final decision on what these minimum requirements should look like. So we're now starting a consultation on these issues, and obviously getting the right calibration of minimum standards is really an important part of this exercise consultation process that we're going through. And maybe, Fiona, if there are things you'd like to add.
Oh, well, I think you've covered it pretty well. I mean, it's there for you to comment on. The consultation will be open for 4 weeks. So we'll be really happy to hear signatories' views and collect views. But, there are different ways to go about doing your engagement. Collaborative engagement is obviously a key part of what you can do, and things that PRI provide for no more than what your signatory fee actually is. So there's different ways to go about it.
Okay, thank you very much, Fiona. Now we've had another question through from Mariam Marinov, who says, will PRI operations be influenced by Brexit? Martin, do you want to take this one first?
So Brexit has been on our risk register for quite some time now. Obviously, from an operational point of view, we are located in London with lots of staff and lots of staff that are not UK citizens. So yes, we've spent a lot of time thinking about possible implications of that. So far, our view has been that this will not be disruptive to the PRI's operations, but it's something that we will monitor very closely, obviously. But as I said, we do not foresee any significant issues related to our operations. And maybe Fiona, if there are things you'd like to add.
So obviously there's still a lot happening with Brexit, as anyone who lives in Europe will know, and there's a lot of unknowns. So it continues to be high on the list of things that we watch. As Martin said, we've done a lot of preparation. We've made sure that all of the staff that we have who were based in Europe but not UK citizens have gone through the process for leave to remain. It was also part of our thinking. I put up the slide that showed the way the PRI operates with the different companies. So we've got an operation that's set up in France. So we've got a French company that we could also be able to use, and we can think about what else we need to do as it becomes more, as more of the things become clear. I think that the problem at the moment is there's still so many things with Brexit that aren't clear to any of us.
Okay, thank you very much. I know there's still so much uncertainty surrounding Brexit and the potential outcome. Let's move on to another question from Jennifer Coulson from the BCI. And she's asking two questions on the annual report and accounts. So first of all, why is the travel budget higher for 2021? She says she would think that with COVID, travel would be strictly limited for this year. Fiona?
So the budget was obviously, we're a 31st of March, end of financial year, 1st of April, start of the new financial year, and the budget was done before COVID hit. We stopped travel for all of our staff in February, and there hasn't been any travel, and we can't see that there will be any travel.
Absolutely. And Martin, let me bring you in here. How do you think the organisation and signatories have coped and adjusted to the new normal that COVID has brought about? It's been hugely disruptive, hasn't it?
It's obviously been very disruptive. I would say that as a starting point, obviously the sort of practical implications of this are just insignificant compared to all the human suffering that this pandemic has caused. So we should maintain a proper sense of perspective on this. But from the PRI, this has forced us to change the way we work, as I'm sure that all of our signatories participating at this SGM have experienced in their own organizations. I think there's a lot of learning in this for us, particularly around digitalization and how we can use digital events like this one to come even closer to our signatories. So I think we need to learn as an organization and see how we can try to be even closer to the signatories and exploit those opportunities. And I think from an operational point of view, obviously the board has been very involved in thinking about how the COVID pandemic affects the PRI operationally. We've had to change our own way of working in the board, and we usually have met sort of 4 times a year in person. Now we meet much more frequently, but online. And so I think we've been very involved as a board in trying to manage this. But I think that the PRI has really operationally worked very, very well through this. And it's very gratifying to see also a very high level of signatory engagement with the PRI through this period. We've had a number of webinars and other digital events with very, very high participation. So I think from that perspective, we're really pleased about how the PRI as an organization has reacted to this.
And we have a lot of people, a lot of signatories are watching this right now. So it certainly does seem as though this digital first option is already reaping rewards. Martin, thanks very much. There is another question that is just coming through. And the question is, when will signatories be able to view the new reporting framework questionnaire? Martin, I think that's one for you.
Well, maybe it's more Fiona, but we usually send out these questionnaires late in the calendar year, and the reporting period is sort of the first quarter of the calendar year. So I should stress that this new reporting framework is, and we've said this from the board, that this is a major revamp and upgrade, we think, of the reporting framework. But it's important for us to learn. And so we view this first year, 2021, as a pilot year in a sense, and we will make a careful evaluation of how this has worked when we see the results of the reporting period, but later in 2021. But Fiona, maybe you have more details on when exactly we'll be sharing this with our signatories.
Sure. So all of the signatories will be able to get access to the new modules. So you can look at them all on the 12th of November. All of the detail will be there, a lot of explanatory notes, etc. as well. So we will send to the signatory base an email with all of the links, etc., on the 12th of November, and it'll go live then. Of course, as Martin said, reporting happens into the period in the new year until March, when it's closed off. But in terms of that information, which I think many signatories are waiting for, is the 12th of November.
Okay, Fiona, thank you. Can you answer this next question that's come through? Can you briefly elaborate on the PRI strategy for increasing presence in the practice of RI in emerging markets?
Sure. Well, we've been continuing to grow around the world and grow our work. So we've had a particular focus on South America in the last couple of years, and we now have staff that are operating we've had staff in Brazil for quite some time, but now we have staff operating in Latin America as well. We have opened an office in China, and we have been also working in Eastern Europe, countries that are newer to responsible investment. So we continue to grow into emerging markets. They're really important to us. The only way we feel that we're going to get responsible investment to be truly global is not by just focusing on a small group of leaders in Europe, for example, that we actually need. Investment is global, and we need everybody around the world to be undertaking responsible investment. So we continue to grow into emerging markets, and we will continue to grow in emerging markets.
And following on from that, Fiona, thank you very much. Martin, there's another question which has come through. What's the PRI strategy around TCFD adoption for signatories in concentrated emerging markets? And there's a particular emphasis on South Africa in this question.
So we have included this year already some TCFD questions in our reporting and assessment framework. And we have said that we want to make sure that we expand that and make sure that there is more climate reporting in the new reporting and assessment framework. So yes, I think encouraging reporting on climate is important. I think we've also, we've intended to step up our guidance to signatories around how they can use the TCFD along two dimensions. One dimension is how can you, as an investor, use the TCFD reporting that you get from the companies you've invested in and incorporate that in your investment strategies. And the second dimension of this is, well, how can you, as an investor, report to your stakeholders using the TCFD framework? And so we've tried to improve guidance on both of those. And then there'll be new guidance from the TCFD itself later this year, probably in a couple of weeks. And the TCFD will come out with updated guidance on the construction and use of scenarios, which I think will be very helpful, and also on how climate-related risks can be integrated into a standard corporate risk management framework. So I think there'll be lots of helpful guidance, and I think the the job of the PRI is try to bring this together and help our signatories really use this to make better. To have a better incorporation of climate-related risks and opportunities in their day-to-day management of assets. But Fiona, maybe you could add if there are some particular emerging market aspects of this.
Well, we focus obviously all of the work that we do on TCFD globally, and we try to take it out to signatories globally because I think it's something that is a global issue, and that's why we've included it in the reporting framework, so it's there for all signatories. And we'll continue to put guidance out. We will continue to do analysis from the reporting framework as well. I think one of the things that's important is that it's one thing for people to start reporting along the lines of the TCFD indicators, but the last time we did analysis, we did a staircase analysis of signatory reporting, and there was only 2% that we really put in the sort of strategic leadership side of things. It was one of the reasons that in our leadership group this year that we focused on climate reporting to the PRI, and I think looking at the report that we've put out should be useful to signatories in some of the developing markets to be able to see what some of those best practices are, and we will continue to showcase best practice for everybody.
Okay, Fiona, thank you very much. Let me move on now to a question from Peter Webster from Viggo. He says, can you tell us more about the WBCSD collaboration and just how it will add to those other initiatives? So, Martin, could you take this one?
Yes. So this collaboration is around corporate reporting primarily. And as you probably know, there is now lots of different corporate reporting standards, and there's been a work going on to try to bring about more convergence of reporting standards. We have felt, together with the World Business Council on Sustainable Development, that there is a need for a strong practitioner voice in all of these processes. These cannot be processes that are set up only by the standard setters and regulators, but there has to be the investors as users of this information, and the corporates as preparer of this information have to have a voice in these processes. And we think it's constructive to have a coordinated input to these processes. So we're not intending to set up a separate process to design a new reporting or corporate reporting standard, but rather to set up a mechanism where we, in a coordinated way, can feed into all the existing processes and make sure that there is momentum still in the work towards more convergence of these standards. And there is sort of an architecture around corporate reporting, which I think is confusing to many. There are many, many different reports. All of them are good and useful standards, but they have, in a way, grown organically from the bottom up in response to different needs. And there isn't a lot of thinking around sort of at the high level what good architecture of reporting looks like. So I think there's been some very, very encouraging developments now. The standard setters themselves have come together in a much more collaborative way. This is, I see it as a continuation of a process that we had called the Corporate Reporting Initiative, where we try to bring together corporate reporting organizations. And then there's some positive developments, I think, from IFRS, where they have a consultation now regarding their own role in this going forward. So I think lots of positive developments, but a need, I think, for a coordinated voice from investors and corporates as sort of both users and preparers to make sure that the practical or practitioner's perspective is part of these processes in a constructive and coordinated way. So that's really how we want to work with the World Business Council on these issues.
Okay, thank you very much, Martin.
Sorry,
Go
can I
ahead,
just add
Fiona.
to that, Susanna? Hi, Peter, and thanks for the question. We've obviously talked about corporate reporting for many years together. So one of the things, adding to what Martin has said, there's fantastic work going on. You know, there's convergence in all of these reporting initiatives, which we've really encouraged and tried to help enable that these things would happen. So we're seeing much more alignment between GRI and SASB, for example. We're completely supportive of all of those things. But if you put all of the different frameworks together, there are still gaps. And what we want to do is try to plug some of those gaps so that we are having that holistic reporting. And then since we made this announcement, of course, we've seen some of the standard setters come out to say that they are going to be looking into these areas. So what we see that we can do with the World Business Council is make sure that we're feeding into them as well through, as Martin said, making sure that there's a strong corporate and investor voice so that we do finally, I think this is an area that's been talked about a lot, but it needs to be finalised. We need to have answers to it. As you know, Peter, we've had so much discussion from our signatory base about this issue. We made it one of the key areas under our blueprint that we really wanted to drive meaningful data. We wanted to be part of the solution. And our signatory base felt very strongly that PRI was a trusted source in this area, that we didn't have a vested interest in anything that was happening other than how do we improve responsible investment. The other issue, I think, is that we want to make sure that reporting, again, covers everything so that we're not just looking at risk-based reporting, that we're also looking at outcomes reporting. And that there's great work, again, going on, but there's still a lot that needs to be done in that regard as well.
Okay, Fiona and Martin, thank you very much. I'd like to move on now to a question that's come in from Senju Mesko, who says, what frameworks do you use to inform proxy voting decisions by signatories? Fiona, if you could take this one.
So what frameworks do we use to inform proxy voting decisions? It depends what we're doing. For most of the things that there is discussions around proxy voting decisions, we're using our collaboration platform. So our signatories use that collaboration portal to put up information about what they are doing, what they're thinking, how they're thinking about voting, any issues that they want to raise with other signatories. Then we, in some instances, encourage signatories to pre-declare voting, and we use, again, that collaboration platform. But we're not a proxy advisor, obviously, ourselves, and we don't advise signatories how to vote. That's up to them to make their own individual decisions. We just provide a platform for information.
Another question has come through from the audience. When will signatories be able to view the new reporting framework questionnaire? And that's a question I'd like to put to Fiona.
So on the 12th of November, in actual fact, so just in a couple of weeks, online we will launch all of the new modules. There'll be lots of information as well. Lots of FAQs will be there. We'll send a email out to all signatories to notify them.
Okay, Fiona, thank you very much. Now we have another question which has come through from Jennifer Coulson from the BCI. And she asks, there is a growing income from grants, donations and other sources. Can the board provide a sense of where this is going strategically? As a signatory-based organisation, how do we ensure that the right balance between signatory needs and accountability to donors is made? Martin, could you answer this question, please?
Sure, thank you. This is a really essential question. And when we set up the long-term funding plan for the PRI a few years back, this was a central discussion that we had. And there was a very firm belief on our side that the PRI should be primarily a signatory-funded organization through fees. And I think there are a couple of reasons for that. One, of course, is that a grant-funded organization spends a lot of time chasing grants. and it's difficult to retain staff over longer periods of time, or at least it can be, because generally you would hire staff for the different projects for the time that you have funding for those projects. And we wanted more stability in the PRI staff. But also, I think that the funding through signatory fees establishes a very important concept of accountability, and we know that we need to go to our signatories to justify the things that we do. We make sure that we consult extensively with signatories, just as we have been doing today when we set out this draft 3-year strategy plan, to make sure that the activities of the PRI are aligned with signatory interests. And if we were reliant primarily on grant funding, we would maybe be more, there's a risk that we'd be more responsive to donor interests than to signatory interests. So this concept of having a signatory fees is absolutely central to us. Today, signatory fees are about 90% of our total income. And that doesn't mean that we're not on an ad hoc basis seeking other sources of revenue. We have some sponsorship revenue from our events. And we have some donor contributions to specific projects. But the important thing is that we set the PRI strategy based on consultations with the signatories to make sure that we do the things that signatories want us to do. And then within that strategy, within that framework, we do seek donor funding for special projects if that means that we can do work that we otherwise wouldn't be able to undertake. But maybe, Fiona, you could give some examples of some of the work that we've been doing recently with grant funding.
Well, sure. As you were alluding to, Martin, I think that the PRI is very fortunate when it comes to the way that we are set up, and we don't have to continue to chase grant funding to make sure that we can keep the doors open. Grant funding means that we can go into greater depth in a number of pieces of work. So there's grant funding for work like Climate Action 100+. So us and another set of organisations, Series, IGCC, example, come together to work on this project, and we've got grant funding for it. We've also have some grant funding for our inevitable policy response work. That's work that requires a whole lot of economic modelling, and we've had to go to other organisations, for example, Vivid Economics, to get that modelling done. We don't have the skills internally to do it, and so it's that kind of work where we need some external funding. But I would also say that we're also fortunate in that where we go to get grants for work we want to do, we don't go to funder. We don't have funders coming to us and we do work that they want done. It's not the way that we operate.
Okay, thank you, Fiona and Martin. I've got a question now on the annual report and accounts. Jennifer Coulson from the BCI asks, why is the travel budget higher for 2021? I would think that with COVID, travel would be strictly limited for the next year. So Fiona, can you answer this one?
Well, actually, that's correct. Travel has been limited. So when we did that budget, the PRI is finishes its financial year on the 30th of March. So the travel budget was put in place before COVID-19, and we stopped all of our staff actually travelling in February, and there hasn't been any international travel that's taken place, and we don't anticipate that there will be any for the rest of this financial year, and probably well into the next financial year as well.
Okay, Fiona, thank you. Now, Martin, can I ask you how the PRI has adapted to COVID-19, particularly with the UK having an increase in cases and more lockdowns?
Sure. So COVID obviously has impacted us as it has impacted all organizations. I think it's important, though, to say that the impact that we have felt has been insignificant compared to all the human suffering that this pandemic has caused. So we should maintain that sense of perspective. Obviously, this has been challenging for the PRI staff, and Fiona can go into a little bit more sort of detail on how we've dealt with that at an operational level. I think For the board, we've been partly concerned with overseeing the operations and making sure that we can continue operating, but also making sure that we don't lose touch with our signatories through this. And I think there's been a lot of learning through this process for everyone, particularly on how we can interact with signatories digitally, as we're doing now through this SGM. And I think a lot of those things are things that we will try to bring forward and make sure that we can use technology to stay even closely connected to our signatories going forward. So I think there is a lot of positive learning in all of this as well. But of course, in the short term, this has been challenging in operational terms for the PRI. And maybe, Fiona, you could expand a little bit on just some of the measures that we've been taking internally.
Sure. Well, of course, we've got staff in many places around the world, but the UK is our obviously the headquarters for the organisation. So I think we've adapted actually really well. Like many organisations, we weren't expecting or prepared for this. We started preparing in February though, and when lockdowns happened in many countries around the world, particularly here in the UK, we were able to very quickly set all of our staff up working from home. We've been able to continue everything that we planned to do, working from home. In actual fact, we had to get involved in a whole lot of work to do with COVID-19 and helping the signatory base and investors with what do we do with COVID-19? How best to engage with companies? What questions should we ask? Doing a lot of knowledge sharing. I do think, like for everybody, it's been a long, hard year, really. So the prospect of going into further lockdowns as we are across the UK and many parts of Europe isn't something that we relish. And I think a lot of people are feeling tired. But as Martin said, really the inconvenience that we all have does pale into significance when you think about the number of people around the world who have lost their lives, the number of people who are sick. So we just have to soldier on, make sure that we're all doing the right thing and that we're doing as much as we can to feed into the recovery from COVID-19 and that we're being part of the solution and not part of the problem.
Okay, thank you very much, Fiona and Martin there. I want to focus again on the annual report and accounts because we have a question from Jennifer Coulson about breaking out the staff makeup even further. For example, combining R&A, investment practices, SDGs and ESG in a team of 40 and set to increase. She says it doesn't really provide signatories with a good assessment of where the resources are going. So Fiona, could you illuminate us a little more on this point?
Sure. So in R&A, which is our reporting and assessment team, as of March 2020, we had 12 staff. In the investment practices team, which is the team that works across asset classes, we had 9 staff. And in terms of ESG and SDG staff, we had 19 staff. So the ESG staff are the specialists that we have working across environmental, social and governance issues, and the SDG staff are a smaller team but working across how we work with signatories and our framework for taking forward the Sustainable Development Goals and our framework for delivering with SDG outcomes.
Okay, Fiona, thank you very much. Martin, there's a question for you now that's come through. Is there scope, do you think, for adjusting the signatory fee schedule to better accommodate emerging market investors?
So we have recognized that paying fees, although we think fees are moderate, can be challenging for some of our signatories in emerging markets. And some, of course, signatories have been affected by large currency movements that have made the fee much higher in their local currency. So we have a program on a case-by-case basis, based on applications, reducing fees for asset owner signatories in emerging markets by 30%. And we have received some applications which have been granted, and I believe the names of those signatories with the reduced fee, that list is published in our annual report. So yes, there is that option on a case-by-case basis based on an application.
Okay, Martin, thank you very much. We've got a questionnaire that's come in from Subbu Loganathan, and they ask how we plan to respond to possible regulatory divergence in ESG for fund managers between the US and the UK and the EU. Fiona, can you take this question?
Sure. Well, I think it's a question for both fund managers and asset owners, and it is a big issue. What we're seeing across the world is really a much bigger transatlantic divide between what's happening in Europe and what's happening in the United States. And we have to make sure that we're feeding in to both areas, because part of what the PRI is doing is making sure that we're feeding into all the new positive work, the work that's happening in Europe. We've been heavily involved in things like the taxonomy. Nathan Fabian, who is the Chief Responsible Investment Officer at the PRI, is going to chair the next stage of the EU work on sustainable finance. And so that will make sure that we're bringing in the signatories' voice. But at the same time, we're making sure that we're working in the US with policymakers and making our voice heard about how we feel about the Department of Labor's recent announcement about the SEC's working in terms of trying to wind back responsible investment, to take away from shareholder rights. We really see them as retrograde steps, and we see them as a complete lack of understanding about what ESG integration is actually about. And so we're working from both ends of the world, and we have to continue to do that, and we will continue to do that and engage in both kinds of work.
Okay, Fiona, thank you. Now, we've had a request coming in asking you to please speak to the PRI's regionalisation strategy and how PRI is meeting the needs of specific markets, namely the United States. Martin, can you take this one?
Sure. So the PRI has for a long time had presence in local presence in different markets, and we have staff now in several countries, working, of course, as liaisons between the PRI central staff in London and signatories locally, but also working on policy issues relevant to those markets, including in the US, where we have policy people on the ground. So yes, this is important for us, that the PRI is and should be a global organization. And I think over time we need to make sure that we have even more local staff, make sure that we realize that we cannot effectively serve a global community of signatories just from one hub in London, but that there needs to be a more regional, more tailor-made approach, if you like. So this is something that is part of our next 3-year strategy. We would like to get signatories' views on what would be the most efficient way of assisting you as input to the consultation that we just launched on strategy. But this is a very essential part of the discussions that the board have around, growing the PRI in a way us connect even closer to the signatories and being even more relevant to the signatories.
Okay, Martin, many thanks. Fiona, can I ask you to answer this next question? How will you grow the UN Net Zero Asset Owner Alliance?
Oh, okay, thanks. So, well, we've got 30 members of the Alliance at the moment. And I think one of the things to note about the UN Asset Owner Alliance, so this is a program that we have in partnership with UNEP-FI, and it's a commitment that it's for asset owners only. It's a commitment that they make to get to net zero by 2050. But it is a significant leadership program. So it's not something that you just sign a piece of paper and make a statement and say, yes, I'm committing to this. You also have to commit to near-term targets. So there's 5-year targets that are put in place that are in line with the Paris Agreement. So with the Paris ratchet, every 5 years, you need to also be setting new targets to meet your commitments. So we've just gone out with the target setting paper, and the target is between 16 and 29%, and we've got this out for consultation, and then individual asset owners will set their own target. We actually only have 2 North American signatories, one being CalPERS and one being CDPQ out of Canada. So we'd really like to grow it in the North American region. So we want to grow it, but we want it to remain that serious commitment, not just sort of signing yet another statement. So I think that as the work is developed and people see what some of the leading organisations are doing, and that this is possible because it's groundbreaking work, it hasn't been done before and it's hard, that we will get others involved and to come on board. So it's a long-term project, and it's something that I'm really, really proud of that PRI and UNEP-FI are doing, and of course even prouder of the signatories who have put their hand up to do this work. It's really amazing.
It certainly will be fascinating to see how it develops. Okay, thank you very much, Fiona. I have another question coming through. It was good to see that PRI has delisted signatories as part of the minimum requirements process. Is 5 enough, though, they ask? Martin.
So I don't think we should operate with sort of targets in terms of how many we want to delist. Let me maybe go back in time to when we set the minimum requirements and our thinking at that time. So when we set the minimum requirements, we calibrated them so that we thought that they would cover about 10% of the signatory base at the time. So meaning we thought that about 10% of the signatory base at the time would fall below the minimum standard that we defined. So when we went through the process, we identified 165 signatories below that threshold that we had set. But we also, as part of this new concept of minimum requirements, set a 2-year period where we would work with the signatories, engage with them to hopefully improve their practices and bring them above that level. So in a way, I would say the fact that we have delisted only 5 is a sign of success, because actually of the group of 165 signatories, we were able to work with the vast majority, around 90% of them. We managed to bring above the minimum threshold that we had defined. And then there were a few who, for various reasons, delisted, and then there were 5 that were delisted by us. And now, as part of the consultation, we have a tightening of minimum standards, and Fiona, I think, explained in her presentation how, our thoughts around that. So the idea is to increase, set the bar a bit higher from now on, but we still want to maintain the approach of working with our signatories to make them improve their standards, rather than kicking out as many as possible. It's not really our objective to increase the average standard of PRI signatories by delisting the laggards. It's much more rewarding, I think, and much more in line with our mission to work with those who are below the minimum standards to increase their standards. And that's in line with our mission of promoting responsible investment practices. So we think that this was actually a very successful exercise, because we were able to target over 150 signatories who were below the standard, and actually help them to improve their standards. And I think that is the way we should be thinking about this.
Okay, Martin and Fiona, thank you so much for answering all of those questions. They've come in thick and fast. It is all we have time for. But of course, if there is any question that hasn't been answered, we will try and respond a little later. Of course, the team is always keen to take your questions. I'm afraid that is all we have time for. We will publish any answers in writing on the PRI website. But do remember that the PRI Digital Forum will continue here tomorrow, and all the information you need can be found on the Agenda tab. Thank you very much for taking part in the Signatory General Meeting. See you soon.